Welcome. Today we're digging into a financial issue that's, well, it's really grabbing attention across the UK, the income tax personal allowance.
Hmm.
This whole conversation, looking at a petition, a recent debate in Parliament, and what it all means, was arranged for us by the experts at ProTax Accountant. They're always on the ball with these kinds of financial shifts.
Absolutely. It's a story that really highlights, I think, the tension between, public feeling and the hard numbers of national economics.
Exactly. Can a petition with over 250,000 names actually change things? Let's unpack this.
So the personal alliance itself, just as a quick reminder for everyone listening, it's basically the slice of your income you get tax-free each year.
Before you start paying income tax.
Precisely. It's fundamental. And any change, or like we're seeing now, a lack of change, hits your wallet directly. It affects living standards.
And the thing that kicked all this off recently was this e-petition, wasn't it? Number 702844.
That's the one.
Raise the income tax personal allowance from £12,570 to £20,000. And it didn't just get a few signatures, it got well over 280,000.
A huge number.
Yeah.
More than enough to trigger that parliamentary debate we mentioned, which took place on May 12th, just recently.
So who is behind it? What was the story there?
Well, what's fascinating here is how it often starts with just one person's experience. The creator was a Mr. Alan Frost.
Okay.
He's a recently retired pensioner, lives down in Bridgewater, and he basically felt it was unjust that his state pension counts as taxable income.
Ah, really?
Especially when the tax thresholds weren't going up. That sense of unfairness, well, it clearly struck a chord with a lot of people.
You can see why. And his petition, it wasn't just about his own situation, was it? He argued for broader benefit.
Yes, exactly. He framed it as, helping low earners maybe get off benefits, letting pensioners have a more decent income after working all their lives, and also putting more money into people's pockets generally, which could then, boost the economy.
Yeah.
Kind of win-win scenario in his view.
So that's the petition. But to really understand why it got so much traction, we need to look at the current situation with that allowance figure. £12,570.
Right.
The key thing here, as you hinted, is that it's frozen. It hasn't budged since the 2021-22 tax year.
That's correct. And this freeze wasn't just a short-term thing. It was Rishi Sunak, back when he was chancellor, in the 2021 spring budget, who announced it would stay frozen until April 2026.
And then it got extended.
It did. Sir Jeremy Hunt, in his autumn statement in 2022, pushed that freeze out even further, all the way to April 2028.
Wow.
Although, it's worth noting, the current Labour Chancellor, in her autumn budget last year, 2024, said they wouldn't extend it again.
Yeah.
So the expectation now is that it will finally start rising again from April 2028.
Okay, so we've got this key threshold stuck in place until 2028, while wages, pensions, prices, they've all been going up. What effect does that actually have on people?
Yeah.
This brings us to that term you hear bandied about, fiscal drag.
Yes, fiscal drag. If we connect this to the bigger picture, fiscal drag is a subtle but really powerful way for governments to collect more tax without actually announcing rate rises.
How does that work exactly?
Well, it's quite simple, really. The tax thresholds, like the personal allowance, they stay fixed. But your income, whether from wages or pensions, goes up, maybe just with inflation.
Right.
So more of your income tips over that frozen threshold. You get dragged into paying tax for the first time, or perhaps into a higher tax bracket.
Even if you don't feel any better off in real terms.
Precisely. Your purchasing power might not have increased at all, but you're paying more tax. It's like a stealth tax increase.
And this isn't just a minor effect, is it? The numbers are quite significant.
They really are. The estimates suggest that by the next tax year, 2025-26, fiscal drag will have brought about 1.3 million extra people into the income tax system.
1.3 million.
And another million people dragged into paying the higher rate of tax. That alone is expected to bring in an extra, $1.2 billion a year for the Treasury?
And looking further ahead.
The Institute for Fiscal Studies, the IFS, they did some projections. By 2028, when the freeze is currently set to end, they reckon 3 million more people could be paying income tax.
3 million.
And 2.5 million more paying the higher rate, all down to this freeze.
Wow. Okay, you mentioned pensioners earlier, Mr. Frost, who started the petition. Why is this hitting pensioner particularly hard? Here's where it gets really interesting for a significant part of the population.
Yeah, it's a major concern for them. If you look at the full new state pension for this tax year, 2025-26, It's 11,962 pounds 80 cents a year. Now, compare that to the personal allowance of 12,570
Ah,
pounds.
there's barely anything between.
Exactly, just over 600-pound quid difference. So if you're a pensioner and you have even a small private pension on top of that, or maybe you do a bit of part-time work,
You're paying tax.
you're suddenly paying 20% income tax on that extra bit.
Mm-hmm.
And that's often a shock for people who assume their state pension would be tax-free.
Do we know how many pensioners are affected?
Yeah, the stats show that back in 2024-25, about 8.5 million pensioners out of 13 million total were already paying some income tax.
Goodness.
And the forecast suggests that Kagemi could climb to 9 million by April 2026. So a huge proportion.
So the petition wants to raise the allowance to 20,000 pounds, which would clearly help those pensioners and lower earners. But are there any downsides to such a big jump? Any sort of, well, unintended consequences?
That's a really important point. And yes, analysis, particularly from the IFS, again, suggests there are. They highlighted that raising it all the way to 20,000 pounds would actually be quite regressive.
Regressive? How so? I thought tax cuts were generally seen as good.
Well, it sounds counterintuitive, doesn't it? But the crucial insight here is who benefits most. About a third of all adults in the UK earn less than the current 12,507 pounds allowance.
Okay, the lowest earners.
Exactly. So raising the allowance doesn't help them at all. They don't pay income tax anyway. The biggest cash benefit actually goes to people earning more, particularly those in the higher tax brackets.
Ah, I see. So it could actually make inequality worse.
That's the argument. It could increase income inequality and maybe even geographical disparities, too. Think about areas with lower average wages, like maybe Sunderland, compared to London or the Southeast. The benefit wouldn't be spread evenly.
Okay, so that's a significant counterargument. Given all this, the petition's popularity, the impact on pensioners, but also these potential downsides, what did the government actually say?
Their position has been pretty consistent. They responded formally back in February 2025, and the Treasury Minister, James Murray, repeated it during that May debate.
Essentially.
No plans to increase the personal allowance to 20,000 pounds. Full stop.
Right. Why not? What's the official reason, especially when, 280,000 people are asking for it?
The core reason boils down to cost. And I think a real nervousness about fiscal stability, especially after the turbulence following the 2022 mini-budget.
Ah, yes, the unfunded tax cuts.
Exactly. The government estimates raising the allowance to 20K would cost many billions. More specifically, they've talked about over 50 billion.
50 billion pounds.
Yeah. The IFS put a wider range on it, maybe 40 to 90 billion, depending on the specifics. But even 50 billion. Well, remember that 2022 mini-budget. The unfunded cuts were around 45 billion.
So it's in that same ballpark, or even bigger.
Potentially, yes. And 50 billion is roughly the UK's entire defense budget for a year.
Wow. Okay. That puts it in perspective.
So the government's argument is, look, this would massively reduce tax income. That means less money for hospitals, schools, all the public services people rely on. And they argue it would undermine fiscal responsibility.
So it raises that big question. What's the right balance? How much tax relief is affordable, and what trade-offs are we as a country willing to make?
Precisely. That's the heart of the political debate.
And that debate in Parliament on May 12th must have been quite something. Did we see these different viewpoints clashing?
Oh, absolutely. You had MPs, mainly from Labour and the Liberal Democrats, really hammering home the impact of fiscal drag on ordinary people, on their constituents.
Like who? What were they saying?
Well, you had Lewis Atkinson from Labour talking about falling disposable incomes, the real frustration people feel. But he also, interestingly, cautioned about the cost, referencing those lessons from 2022. Right. Then Tom Morrison, a Lib Dem, spoke very powerfully about the poverty crisis. 1 in 5 people in poverty, he said. He even shared a personal story about his mom struggling when he was young and called for things like scrapping the child benefit cap. And his colleague, Daisy Cooper, called the petition a cry for help. She pointed out that the Lib Dems, when they were in coalition government, did raise the personal allowance significantly,
Hold up.
taking about 3 million people out of tax. And she suggested ways to pay for it now, like tweaking taxes on big digital companies, online gambling, maybe reforming capital gains tax for the wealthiest.
So that was one side. What about the Conservative MPs and the government response?
They acknowledged the public feeling, definitely. Wendy Morton, for instance, talked about pensioner grievances, but also floated the idea that giving pensioners more money might boost the economy. But the main thrust from the Conservative side and from the Treasury Minister, James Murray, was fiscal responsibility. James Wild, another conservative MP, argued that historically labor governments tend to leave taxes higher. He pointed to past conservative efforts in raising the PA.
Mm-hmm.
And he really pushed the point.
Mm-hmm.
If you're proposing something costing £50, $60 billion, you absolutely have to say how you'll pay for it. Cuts, other taxes, more borrowing.
Fair point.
And James Murray for the government basically doubled down. He said, yes, we want low taxes, but fiscal responsibility comes first. He argued the UK's personal allowance is already generous compared to other G7 countries.
Is it?
He stated it was the most generous, yes. And he pointed to other support measures like the national living wage increases and the pension triple lock. His line was that a 20K allowance would risk economic chaos and mean huge cuts to public services.
So a real clash of priorities there. Okay, let's bring this back to the listener. Knowing all this, the freeze is likely here until 2028. The government isn't budging on the 20K idea. What can you actually do about it? How do you navigate this?
Right. Practical steps. Well, one of the simplest but potentially most impactful things is to check your tax code.
Your tax code, explain that a bit.
It's that code on your payslip, usually numbers and a letter, like 1257L for the standard £12,570 allowance. It tells your employer how much tax to take off.
And they can be wrong.
Oh, yes.
Yeah.
HMRC figures for 2023-24 suggested about 1 in 5 people were on the wrong code. That led to $1.2 billion in overpaid tax collectively.
Wow. $1 billion.
There was an example given of a nurse, Bronwyn Tewksbury, who overpaid 144 cents just because of a wrong code. Happens a lot.
So how do you check it?
You can log into your personal tax account on the gov.uk website. It's usually on your payslip too, or your P60 form at the end of the tax year. If it looks wrong or you don't understand it, contact HMRC. You might be due a refund. Apparently 2.1 million people claimed back $750 million in 23-24.
Definitely worth doing then. What else?
Well, boosting your pension contributions, if you can afford to, is a very tax-efficient thing to do.
How does that help with income tax?
Because the money you pay into your pension usually gets tax relief. It effectively reduces your taxable income. So if you earn, say, £25,000 and put an extra grand into your pension, you could save £200 in basic rate tax right away. Maybe more if it's done via salary sacrifice, saving national insurance too.
Okay. Good tip. Anything else?
Using your tax-free savings allowance. ISAs are the main one. You can put up to £20,000 a year into ISAs, and any interest or investment growth is completely free of income tax.
Right. Keep the tax man away from your savings growth.
Exactly. And for married couples or those in civil partnerships, check if you're eligible for the marriage allowance.
He says that again.
If one partner earns less than the personal allowance, £12,570, they can transfer a chunk of their unused allowance, £12,060 of it, to their spouse, as long as the spouse is a basic rate taxpayer.
And that saves.
It can save the couple up to $252 a year in tax. Worth checking out.
And for people who are self-employed.
Oh, absolutely crucial. Claim all your allowable business expenses. Every legitimate expense reduces your taxable profit, meaning you pay less tax. The example given was a graphic designer, Idris Llewellyn, who saved £400 in tax by claiming £2,000 worth of expenses. Don't leave money on the table.
So some really practical things people can do right now to potentially lessen the impact of this frozen allowance.
Definitely. These are all current for the 2025-26 tax year and can make a real difference.
And I suppose beyond managing your own finances, if you feel strongly about the policy itself, the avenues are still there: signing petitions, contacting your MP.
Yes, engaging with the democratic process, joining groups like Age UK or maybe the Federation of Small Businesses, if that applies. They lobby on these issues. Your voice does contribute to the broader conversation.
So what does this all mean for you? We've seen this groundswell of public opinion pushing for a higher personal allowance, driven by real concerns about living costs and fairness, especially for pensioners. But we've also seen the government pushing back hard, citing the massive cost and the need for fiscal stability above all else. It's a debate that's clearly not going away.
And this raises an important question for you to mull over. If this freeze does continue until 2028, what happens then? We mentioned the state pension is already close to the current allowance.
Yeah.
Well, with the triple lock, the state pension could easily reach, maybe even exceed, £13,000 by 2028. If the personal allowance only rises slightly, or not at all initially, almost the entire state pension could become taxable for many.
Wow. That really brings home the potential long-term impact of fiscal drag, doesn't it?
It certainly does. Makes you think about how these policy settings ripple outwards over time.
Definitely food for thought. It really underlines why understanding these tax issues and planning your own finances is so important right now. And look, if you need help navigating all this, getting personalized advice on your income tax, maybe benefits, or just understanding these complex changes, we really do recommend contacting the team at ProTax Accountant. They specialize in this, they understand the nuances, and they can provide that expert guidance to help you make informed decisions.
Sound advice.